ultimately committing new aggression against Ukraine.
Blinken said Vladimir Putin was likely taken by surprise by the united front of Western allies, adding that the path of diplomacy remains open. In Washington, Irv Chapman, Bloomberg Radio.
International Olympic Committee President Thomas Bach says he was disturbed watching Kamila Valieva's stumbling performance in the women's figure skating finals yesterday. The 15-year-old has been at the center of a doping scandal after testing positive for a banned substance. Bach says he found it sad to see the lack of support from her closest entourage when she left the ice.
Rather than giving her comfort, rather than to try to help her. You could feel this chilling atmosphere, this distance.
Bach says the Valieva incident is raising concerns about whether there should be a minimum age limit for Olympic competition. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update from Washington, D.C., Nancy Lyons. Tim Stenevec and Katie Greifeld, we are live in New York City in the Bloomberg Interactive Broker Studio. Well, speaking of New York, Katie, a story that caught my eye earlier today is, well, I love talking all things New York real estate. And I love talking all things real estate, which we're going to be doing a little bit later in the program, too. But this story by Mr. Elena Igafopoulou, talking about renters lining up to fight brutal bidding wars, because a year ago, Missy was writing stories about how this was the best time ever in our lifetimes to move to New York City because the deals were to be had.
How the tables have turned. Well, it looks like a lot of people did move to New York City that saw that, because as she lays out in her article, some people who left New York during the pandemic, they're moving back, and that's why you're seeing record high rents, because inventory is pretty low at this point. So you're seeing these long bidding wars going on, and it's pretty cold outside. There's a great photo in this story about people standing online just waiting for an open house at a rental unit.
Well, you hit the nail on the head, because let's go through these numbers here. We're talking low vacancy rates leading to a rapid drop in listing inventory and to record prices. This is according to brokerage Douglas Elliman Real Estate. Manhattan median rent jumping 18.3% in January from a year earlier to $3,550. That's according to a report by the appraiser Miller Samuel and Douglas Elliman. This, to contextualize it, Katie, it's just shy of the median rent of $35.95 reached in January 2020 before the pandemic exodus sent rates sliding. So we are almost back. We talk a lot about being back to pre-pandemic levels when we think about companies that have been reporting results lately.
And in terms of treasury yields, of course.
Of course, because you are so focused on the bond market. Mm-hmm. But we are at pre-pandemic rates when it comes to renting here in New York.
I have to say, I don't love reading this story because my lease is up in July. It was a 2-year lease. Bad timing. I signed July 2020. It felt like a hero. Reading this story makes me nervous. We haven't yet started looking around, but it doesn't seem like a great time for us.
No, but just maybe start looking now. Maybe move to New Jersey.
I should move to New Jersey. New Jersey, it beckons me.
It beckons. You're listening to Bloomberg Radio. This is Bloomberg Business Week. years ago now is winning big as rents around the country are soaring. Pat, great to have you with us. Talk a little bit about the pattern shift that we've seen just when it comes to real estate in the United States and how these institutional investors, these large groups of investors, have started to buy up rental properties throughout the United States.
People have always rented houses. It used to be either just a mom and pop, just somebody, maybe you inherited your mom's house and you decided to rent it out rather than putting it on the market. Maybe you'd have small local groups, but it just wasn't practical to build big businesses. Or you couldn't really manage 500,000, 5,000 homes in a metro because you'd just constantly be driving around. And following the foreclosure crisis, a handful of Wall Street firms recognized there was an opportunity to buy homes really cheaply. And because they could buy homes at such a low basis, they could invest in the property management systems to, start hopefully operating them, even as efficiently as an apartment building is probably the goal. And, certainly mobile technology helped, right? Like without a mobile phone on the dashboard of the repair van, like this whole thing would be impossible. And certainly other technological advancements in terms of being able to buy homes quickly, being able to find homes to buy, being able to lease homes without having to have an agent open the door for somebody was really a big deal. And as a result, this became a business that you could run. Now, over the last couple of years, and arguably this was happening already before the pandemic.
Yeah, you had Blackstone and Invitation Homes.
You did, and not only did you had Invitation Homes had been a public company for a few years, and so there were starting to be enough published public company results or a couple other public companies that investors kind of started to gain some confidence that this was a business that could be run well. And I would say the big real estate money really did start moving into the space really right ahead of the pandemic. And it started going from funds that were seeking larger returns. It was starting you're starting to see core funds invest in these houses. And then the pandemic really kind of unleashed, a tidal wave of capital. Didn't make sense to own office buildings in the same way because the office buildings were empty. Didn't make sense to invest in hotels or malls, but people were spending more time in their houses than ever, and they wanted bigger houses, and it looked like a good place to put capital work.
And Pat, let's name some names here because, a central character in your piece is Don Mullen, formerly of Goldman Sachs. Then he founded Pretium Partners. I hope I'm saying that correct. Tell us about him and how he emerged as, the character that you focused on in this story.
I've always been interested in, I always say Pretium, but
I'm famously bad at saying words, so I trust you.
Well, so am I. I've always been interested because my observation covering this sort of niche in the real estate world is that there are real estate people in this business, very often apartment people, and then there are credit people in the business. And I've always been interested in Pretium because it was founded by a guy with a long history on Wall Street in credit, and with a view that increasingly, as I understand it, with a view that increasingly there was going to be a need. Families were going to want houses and weren't going to be able to get mortgages. And you could build a business renting professionally managed, professionally managed type of kind of product that didn't exist before to people who couldn't get into a mortgage but wanted the space.
Okay, but here's the problem, and you lay it out so well in the piece. These large institutions or investors can come in, pay $50,000 above asking, crowd out a person who could become a first-time home buyer, and then turn around and lease that home to that person for more than the cost of a mortgage.
Yeah, absolutely. And I mean, it's and to be fair to the Wall Street guys, it's not just the Wall Street guys. It's also the doctors and the dentists and the country club groups who want to invest locally. But you have people who can come and make cash offers on homes, and because there's as much rental demand as there is, right? I mean, we've been in this record hot for sale market for the last year or year and a half or so, but rents are rising at an incredible rate. I don't have data on Pretium's rents, but you mentioned Invitation Homes. You know, on new leases in Phoenix, at least in the third quarter, I didn't get a chance to pull the numbers they announced this week, but in the third quarter, the new lease, in other words, one tenant moves out and they bring a new tenant in, I think they were up almost 30%, like 29% year over year. So there's been tremendous demand for rental housing, in part because there's a shortage of for sale housing. And so families that would buy are now forced to rent. And the opportunity to push rents is, you know, giving these companies more and more buying power.
Hey, we only have 30 seconds left, Pat. What are these homes like? You made a trip to Arizona.
They're nice. Well, they're nice, and they're sort of like the home. My experience is they're just like all the other homes around them.
Yeah.
You know, if it's in a nicer neighborhood, you see green grass and kids playing. If it's in, you know, a neighborhood where the home values are a little lower, you know, it has a slightly different feel.
Yeah.
But they really look like any other houses.
Well, this is a really great piece. It's in the upcoming issue of Bloomberg Business Week. It's the year ahead issue. Check out the magazine. You'll be able to read it on newsstands soon. Right now, you can read it on the Bloomberg Terminal and at Bloomberg.com. Patrick Clark, real estate reporter for Bloomberg News, joining us live in the Bloomberg Interactive Brokers studio. Well, February is Black History Month, and every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 18th, here's Bloomberg's Renita Young.
On this day in Black history in 1688, Germantown, Pennsylvania Quakers hold the first formal protest against slavery. A petition was drafted on behalf of the Germantown meeting of the Religious Society of Friends. In the document, the four men used the Bible's golden rule to argue against such inhumane treatment of their fellow man, regardless of the color of their skin. Now, the golden rule, of course, is the principle of treating others as you would want to be treated. The petition argued that every human, regardless of their belief, color, or ethnicity, has rights that should not be violated. Seeing the injustices of the slave trade, these men courageously took a stand against slavery based on their religious and moral beliefs. That's Today in Black History. I'm Renita Young, Bloomberg Radio.
A big thank you to Bloomberg's Renita Young for today's installment for the month in Black history. Well, the S&P 500 almost positive a little moments ago, but now back in the red, down 0.1%. Coming up next, it's Countdown to the Close. This is Bloomberg.
Comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading day and in the week. Romaine Bostic here. Taylor Rigg, Shanali Bassick counting you down to the closing bell. We're joined right now by our colleagues Tim Stenovic and Katie Greifeld, in for Carol Masser, an absent Carol Masser. We welcome in our audiences across Bloomberg TV, radio, and YouTube. And Carol's missing out on a lot today, Tim, here. We talk about a week. We talk about volatility in the week. This seems to be the story that we've seen now pretty much all year long.
Yeah, pretty remarkable turnaround when it comes to U.S. equities just in the last hour or so when we saw stocks climb higher. I'm keeping an eye on the ARK Innovation ETF, though. These are, of course, the disruptive tech stocks that Kathy
is that the
Wood
deep
follows.
value fund?
Yeah, it's kind of the opposite of that. But hey, hitting another 52-week low today as a result. It was down more than 6% a little earlier in the session.
And what's interesting to me is that you are seeing this big buy the dip mentality just in the last hour of trading, not matched in the bond market. Yields really haven't budged at all. I mean, I'm looking at the 10-year Treasury still at 1.93%.
Yeah, I have this whole screen here that has all the prices, and you're not seeing any movement right now in the bond market. You are seeing a lot of movement right now in the equity market. In S&P 500 that was down more than 1% on the day, now basically call it unchanged. Similar story for the Dow Jones Industrial Average. And the NASDAQ would at one point look like we were talking about a 2% decline at one point here on the day, now only down about 0.4%. The Russell 2000 down about 0.2%. We should point out that both mid-caps and transports right now are in the green.
Yeah, we really ought to take a look at what the S&P looks like inside. When we look at the members of the S&P, we have energy dropping more than really any other sector here. We don't have everything in the red here. We have materials, consumer staples, financials still in the green on the day, not by much, less than 0.4%, but it is not a broad-based decline here.
Yeah, and can talk about some of the individual movers. Yesterday after the bell, there was a lot of talk about Meta Platforms, the company formerly known as Facebook, the idea that its market valuation had taken it out of the top 10 companies worldwide here. Then really not getting much oomph today. The shares actually were a little bit higher, but now basically flat on the day, up about 0.1%. And we're talking about a stock, of course, that's had a 45% drawdown from that September peak, and a lot of talk right now about a lot of those FANG names that led the last bull market cycle and whether they're going to be contributors to the next cycle. Intel not contributing today. Those shares down about 4.5% after that investor day yesterday with Pat Gelsinger. His outlook for the company, 2% growth in the current year and maybe getting into the mid to high single digits in the next couple years, not enough to satisfy investors. Pilgrim's Pride down about 13% after JBS decided to walk away from the deal to buy out the rest of the outstanding shares there, Taylor.
And I really want to go back to the focus on big tech, and I know Katie and Tim, we're going to fold this over into the bond market and really sort of the signal that we're getting. And Tim, we're just coming off of a great conversation from Jason Robbins over at DraftKings saying that the underperformance, and here, of course, we're showing a chart that big tech may no longer be big tech. Only 18% of the NASDAQ is over the 50-day moving average, and just 35% is over the 200-day moving average. And what he's saying in his words is sort of this broader rotation out of companies where, remember, it was growth at any cost. And as long as you didn't have some profitability now, it was okay if you could show it a few years from now. But that really, all of that is being questioned, Tim, as we think about this new environment.
Yeah, and I wonder to what extent this has to do with interest rates. You mentioned the new environment. Front and center, of course, is the Fed. Well, today, New York Fed President John Williams said in a virtual discussion with New Jersey City University that a rate hike would be appropriate this coming March, and he foresees balance sheet reduction beginning later this year. Check out what he had to say.
Now, once the interest rate increases are underway, the next step will be to start the process of steadily and predictably reducing our holdings of Treasury and mortgage-backed securities, which had grown significantly as a result of the purchases that began back in March of 2020. Now, last month, the FOMC released a set of principles that will guide that process. And assuming the economy develops roughly as I expect, I foresee this process getting started later this year.
Well, that was New York Fed President John Williams in a virtual discussion earlier in the day. Taylor, in the meantime, though, Romaine, in the meantime, guess what the Fed is doing? They're still buying bonds.
Yeah, that's right.
Thank you, Tim. I almost forgot.
Yeah, happy QE day. That continues here. I think it's interesting when you heard the comments out of John Williams. Of course, we also heard from the Chicago Fed President Charles Evans. They both seem to back the idea that the Fed's going to move in March. They seem to, though, stand by the idea that it still needs to be a gradual pace of hikes, so basically 25 basis points. But Evans was also a little bit more forceful in this idea that the Fed was behind the curve. He basically said that flat out. Now, why he's only supporting 25 basis points, who knows? But it gets to the idea here that, once again, Taylor, we are in QE.
It feels like the bond market is starting to get on the same page as Evans and as Williams, because if you look at the pricing in swaps, I mean, I think pricing for March got to 45 basis points last week. Now I'm looking at it, we just have 31 basis points priced in for March. So those 50 basis point rate hike bets are definitely starting to be pulled back.
And I want to pull up that direct quote, Romaine, because it is starking. He says, the current stance of monetary policy is wrong-footed. It needs substantial adjustment. You talked about an adjustment. Was it Deutsche Bank today bringing up forward a full-year rate hikes to about 7 basis points, I'm sorry, 7 rate hikes this year, as I'm trying to find my notes. JP Morgan, Goldman, B of A, they're all looking at 7 hikes this year.
And meanwhile, you do have some people going in the opposite direction, kind of ratcheting it down to that 6 range. I am curious, though, Shanali, I mean, when we talk about, to Katie's point here, and we talk about the pricing that we're seeing in the swaps market, is that because of the commentary out of the Fed, or is that because people are trying to sort of game the geopolitical issues and whether that keeps the Fed at bay?
Yeah, you got to wonder where the geopolitical issues come into play, because you saw such a knee-jerk reaction last week to some of the economic data coming out. But again, when markets get choppy, then you start to also worry about the trajectory moving forward here and whether things are not as strong as they seem.
Well, yeah, go ahead, Romaine.
Well, yeah, and no, I mean, to her point, and you taking a look here for our viewers, Bank of America still pricing in 7 hikes, Goldman Sachs predicting 7, as is JP Morgan. The folks over at Wells Fargo, though, they're still at 5.
Well, so let's bring this back to the NASDAQ 100, because today the NASDAQ 100 was down 15% from its highs just in November. And I'm wondering to what extent the relationship between the decline in tech stocks has to do with investors' reaction to a rising rate environment, because we all knew rates were going to have to go up at some point.
Is it a decline in tech stocks or a decline in growth stocks?
I mean, or is it recession risk, Romaine, that we haven't talked about yet? And I'm wondering if we should be.
You're talking recession risk?
Well, didn't someone, you pointed out a note that maybe this should be a topic that we start to discuss.
I mean, it's in the Bank of America note.
Mike McGlone from Bloomberg Intelligence, senior commodity strategist, he brought this up yesterday on our air when talking about oil prices.
Yeah.
I don't know. Recession risk. I do want to go back to all of those bank forecasts for the Fed, because I just want to point out the terminal rate as it's priced in right now is only about 7 hikes. So, I mean, Bank of America and the like, they have their view, but the bond market isn't really buying it yet.
All right, guys,
the market's never wrong, Tim.
So I hear. That's what a bond reporter would say,
Carol
right?
go today? Does she always get Fridays off?
Is she allowed to take days off?
Can we quickly remind everyone that it is the 1-year anniversary of Perseverance landing on Mars?
Oh, okay. Well, that's what she's celebrating today. Thank you for that, Taylor. Hey, we're going to be back with you guys in just about an hour to count you down to the close and take you beyond the bell. That is going to do it, though. What's that?
Is Katie going to be there?
I'm going to be here just for you.
She's not allowed to go anywhere until 5. Don't worry. More Bloomberg coming up next.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. Katie, I'm going to put you on the spot here to talk a little bit about what you're seeing when it comes to rate hike expectations, because I thought that was a really interesting part of what you brought up just now with our friends at Bloomberg TV.
And, I mean, I feel like you see this often, that particularly forecasts get ahead of what's actually priced in, that you see analysts that are much more hawkish when it comes to what the Fed is going to actually do than what the Fed actually does, and then what the market actually anticipates. And you're seeing that play out now. I mean, Bank of America, 7 rate hikes this year.
So is that 7 25 basis point rate hikes?
I would assume
that's
so.
That's how we should think about that, right?
It sounds like, reading their notes, that that's what they're expecting. Yeah. But again, there's only 7 quarter-point hikes priced in for the entire cycle.
So that's a big deal.
It is a big deal.
But it's also important for us to think about the tools that the Fed has at its disposal, not just to combat rising inflation, but also to act if there were some sort of crisis.
Yeah, and I mean, we have to talk about the balance sheet. I hope we talk about the balance sheet at 4 p.m. because I think that's a more interesting conversation to me than rate hikes, because it's unprecedented. We've lived through rate hiking cycles. This is uncharted territory for us and for the Fed, and it's definitely a tool that's at their disposal and that we know that they're thinking about.
Well, in the meantime, the S&P 500 has kind of been all over the place. It did move into positive territory, though, now down about 0.4%. For world and national news, let's now head to Washington, D.C. and check in with Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden will be updating the nation on the Ukraine crisis this afternoon at 4 p.m. Wall Street time. You can listen here on Bloomberg Radio. Fears of an imminent assault rose today when the Russian-backed leader of a separatist-controlled area of eastern Ukraine said that officials there were launching a mass evacuation of civilians into neighboring Russia. Secretary of State Antony Blinken is in Germany, where earlier today he says it's important our allies stay united with us.
I think President Putin's been a little bit surprised at that solidarity, at the way that NATO has come together. The European Union has come together.
Blinken has agreed to meet Russian Foreign Minister Sergei Lavrov next week under the condition that Moscow refrains from attacking Ukraine. With inflation taking hold in the U.S., the Biden administration and lawmakers have been looking at ways to address the issue. One suggestion has been to temporarily lift the gas tax. But former Treasury Secretary Larry Summers tells Bloomberg that's plumbing the depths of new bad ideas.
I think there needs to be a lesson learned about gimmicks that poll well. They're like sugar highs. They make you feel good, but they really often don't redound to anybody's substantial political benefit.
Summers says taking a gas tax holiday would hardly be noticeable to consumers and could spur inflation for other items as spending shifts. Summers spoke with David Weston for Bloomberg's Wall Street Week, which airs tonight at 6 Wall Street time on Bloomberg Radio and television. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenivek and Katie Greifeld. We are live in the Bloomberg Interactive Broker Studio in New York. Katie, a story that crossed late last night that I must admit I was actually still awake, and I read it as soon as it crossed. It's a Bloomberg exclusive from our team, including Srinath Rajan, Jillian Tan, and Hema Parmar, about what's been happening with block trades, and the relationships at Morgan Stanley are snared now in a probe.
And this probe, this article describes it as a sprawling probe. And so just to back up a little bit, block trading, it's one of the few Wall Street businesses where relationships still drive the flow of deals. And the concern here is that, these banks might have been improperly tipping off investors to stock sales before they happen, because these block trades, they can really impact stocks. And you see it too in the bond markets as well. Treasury blocks go through often, and that's worth, a basis point or two often. So that's important information.
Yeah, over this past week, Bloomberg reporters have had a lot of stories on this. So if you're interested, definitely go and check this out. The latest iteration of this focuses on Pawan Passy, who worked the phones inside Morgan Stanley. Ever since his arrival after university back in 2004, he rose to become a chief communicator with investors buying and selling big blocks of stocks. As you mentioned, Katie, it's a business that dominates on Wall Street. In November, his chair suddenly went empty at Morgan Stanley's headquarters overlooking Times Square, and the whispers began spreading. The bank had put Passy on leave, and the feds were poking around.
Yeah, and the Justice Department, it is seeking access in some cases to online chats,
Connection
mobile
lost.
phone texts, emails, and messages sent by apps, according to people familiar with the matter. They're also looking at Passy's frequent phone contacts, and some of Morgan Stanley's key clients are just among the roster, which includes more than a dozen executives at other investment firms.
Really important to note here, no one has been accused of wrongdoing. Still, though, a lot of interest around this story, given that block trades are one of the areas on Wall Street where relationships continue still to dominate. Bloomberg Business Week, this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session a few minutes ago. We almost had unchanged or little changed on the S&P 500 index, but right now, red on the screen. We have got just about 43 minutes to go ahead of the closing bell. Let's find out what's moving markets as we head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red, but off their session lows. Dow's down 120 points, was down 325. S&P's dropped 17, while the NASDAQ is back down 111. The U.S. 10-year yield at 1.93%. Gold is down 4. Oil is in the red, and Bitcoin is trading lower by 1%. Among the main 11 S&P sectors, leaders were materials and consumer staples. Energy and industrials were under pressure. Leaders to the upside in the Dow, Cisco and Coca-Cola, while Intel and Boeing led to the downside. And after earnings, Roku plunged as much as 29%. In other news, Deere said that supply chain unpredictability is weighing on its outlook, and GE plunged intraday after warning of supply chain pressures through mid-year. Wrapping things up, the Ford CEO is considering ways to run its EV business separately. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we love to do regular check-ins when it comes to crypto. It's certainly something that we talk about each and every day on Quick Take Stock. Katie Greifeld, who's joining me right now, we co-anchor that each day at noon Eastern Time. You can watch that at Bloomberg.com/QT. Someone who joins us all the time on Quick Take Stock is Juthika Chow. She's head of OTC options trading at Kraken. She joins us on Bloomberg Business Week Radio this afternoon from New York City. Juthika, how are you?
Hey, guys. Good. How are you?
We're doing well, getting ready for this 3-day weekend. But before we get there, we got to do a deep dive into Bitcoin and what's been happening with crypto. Bitcoin down about 1.5%, really testing that $40,000 mark. We ask you all the time, Juthika, to explain the volatility here. Why are we seeing this recent sell-off when we were testing $44,000 recently?
Well, I think the crypto markets and Bitcoin in particular have been seeing a little bit of a lack of conviction as it relates to Bitcoin. You know, a lot of the long holders are already long, and I think some of the bears have paired their positions, and so a lot of people are on the sidelines, and that's kind of resulting in Bitcoin just moving with the broader markets, but sort of following the trends of the NASDAQ and what's going on globally without some of the more Bitcoin-specific factors at play. And so I think that's kind of what's driving it right now. We're definitely seeing more interest in other kinds of trading like options and derivatives and yield plays. But I would say in terms of the spot flows that we're seeing on the OTC desk, it's actually more money on the sidelines and not a lot of conviction in the spot space right now.
Well, Juthika, that's what I want to talk about is that, you know, you are seeing a lot of interest in trading. I mean, if you look at the NASDAQ 100, like you said, if you look at options and derivatives, there's a lot of activity there. Not a ton when it comes to crypto, though. I mean, if you look across exchanges right now, crypto exchanges, that is, you have seen trading volumes drop. And I'm curious to know if this sort of malaise is to continue, where, you know, we're sort of range bound, sort of trading sideways. Is that ultimately bad news for crypto? Because, I mean, at least when it comes to some of the people I follow on Twitter, it seems like the volatility is part of the fun.
I mean, there's no question that volumes are inversely proportional to volatility. So if you looked at when we had the bull run, it wasn't just the fact that Bitcoin was going up, but the volatility it was realizing was north of 100, and that was sustained for months at a time. And that was definitely good for volumes and activity and kind of building momentum, and I think like real economic momentum. And momentum goes both ways, kind of like inertia. So if things sort of stop moving, then people stop talking about it. And I think that definitely comes into play. We're seeing that with Bitcoin sitting at a 60, 70 vol. The other aspect is that it usually is relative to what the other opportunities are. And so to the extent there is volatility or relative volatility in the stock market, then capital might be deployed there instead. The one thing I will say is that On the option side, we do see we're seeing very healthy flows and activity, and I think part of the reason there is because with options, there's a wider range of more nuanced positions and bets that people can put on, different kinds of yield plays. So it's not as simple as just buying or selling. But yeah, there's no question that overall, as we want dampened volatility as a sign of maturity, when it comes to trading volume and activity, it has the sort of quieting effect.
And something I think about a lot is that there seems like there's no shortage of enthusiasm in the broad brush crypto space. If you think about all the enthusiasm around Web3, around DeFi, around the metaverse, but it seems like that isn't translating into the price of Bitcoin at all. So I'd love to hear your thoughts on whether we're sort of seeing I don't know, maybe a bifurcation in the space, maybe something not as strong as that. But again, it just seems like there is a lot of enthusiasm and things to get excited about in the broader cryptocurrency universe, but not necessarily when it comes to the prices of the coins.
Definitely. And this is something we've seen over the years. The price of the coins is often driven by whales, by very large, healthy accumulation, unhealthy accumulation. It's really, the price action can deviate sometimes from what we're seeing in terms of like the fundamentals on the ground. And I think if I look back to like 2017, that happened in maybe more of a negative way, which is that price was appreciating extremely rapidly, much more than some of the actual progress that we were making in terms of building out use cases and protocol development. Now one could argue it's perhaps the opposite. There's price is a little bit lackluster given some inflation concerns, but there's more going on in terms of building, investment in the space, hiring in the space from traditional finance and tech. And so I think a lot of these things we'll see play out over the course of years as companies are built and use cases are built, and it's not necessarily reflected in price because those dynamics are a little bit different.
Hey, Judika, we only have about 40 seconds left with you, but I'm wondering, when you think about the crypto universe, what is it we should be focused on? What's it that our investor audience should be focused on in terms of catalysts moving forward?
Well, I think right now there's definitely pay attention to the macro environment, mostly in terms of volatility, but also in terms of inflation. I think the three of us have talked a lot about whether or not crypto is an inflation hedge, and at some point the tides will turn and it actually will become an inflation hedge. And I think being positioned right at that time. The question is when.
The question is when. I mean, we've had plenty of hot inflation prints. Haven't really seen too much of it into crypto lately. But to Judika's point, it seems like a tech stock.
Judika Chow, head of OTC options trading at Kraken, joining us on the phone from New York City. Much more Bloomberg Business Week coming up in just a few minutes. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Broker Studios in New York. 21.2% to the downside. That's what shares of DraftKings are doing right now. In just a couple of minutes, we're going to hear from the company's CEO, Jason Robins. He sat down a little earlier with our friends at Bloomberg TV. We're going to get a clip of that interview in just a minute. First, though, we are less than a half hour away from the close of trading on this holiday weekend. Charlie Pellet, what's it looking like?
Oh, what's it looking like is that we're betting on a close that will be substantially lower. We've got the Dow, the S&P, NASDAQ all dropping right now. Just about the top of the hour, we were making a run for unchanged. Didn't happen. Right now, we've got a sell-off underway. 28 minutes to go ahead of the close. S&P down 36. Drop right now of 0.8%. We'll give you the why in a moment, but you know the reasons. The Dow down 286, down 0.8%. NASDAQ slumping 183 now, down 1.3%. NASDAQ 100 index down 1.3%. Russell 2000 down 0.9%. Dow Transports had been higher, now lower by 0.3%. So to give this some context, right now we've got the S&P down 37, down 0.9. Worst level have been down 53, drop right now of 1.2%. Stocks dropping, bonds climbing at the end of a jittery week that's been marked by a standoff between the West and Russia, as well as those ongoing concerns about the Federal Reserve's next policy steps. Again, that 10-year yield, 1.92%. Spot gold down 0.2%. $18.94 the ounce. West Texas Intermediate crude down 0.4, $91.41 a barrel for WTI. California Governor Gavin Newsom has announced the first shift by a state to an endemic approach to COVID-19, and he's calling for vigilance over mandates. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he told us this morning he is advocating caution.
You know, schools are the big question right now, with vaccination rates not being very good there, and that environment of having lots of people in small spaces together being one that runs a risk of high transmission. I think we really have to be careful about those types of situations. So the take home is look at your situation and address some of the easy concerns that you can make to try to limit transmission. But there really is, in many parts of the country, no reason not to start thinking about moving towards that normalcy again.
And that's Dr. Andrew Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, all lower right now. Pfizer down 0.9%. Its German partner BioNTech, its ADR is also down 0.9%. AstraZeneca's ADR is down 1.8%. Moderna slumping by 1%. Johnson & Johnson down 1.3%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Remarkable to see the way the equity market's jumping around on this Friday afternoon. Well, speaking of jumping around, shares of DraftKings lower right now by more than 21%, falling the most in almost 2 years after the company added fewer new customers in the fourth quarter and projected a wider loss this year than Wall Street had expected. CEO Jason Robins sat down just moments ago with our colleagues on Bloomberg Television to discuss the company's earnings. Bloomberg's Taylor Riggs kicks off the conversation. Check it out.
Jason, maybe first off explain sort of the difference of what you're seeing versus what the street and maybe the market is getting wrong today.
Well, I think that what we're seeing is that the playbook that we set out from the day we went public has been consistent and is working. We've always targeted 2 to 3 year paybacks on new customers, 2 to 3 year path to profitability on new states that we launch. We haven't changed that at all. We've continued to execute against that. If anything, we've been seeing more favorable results, and obviously there's been a lot of new states launching, and I think what's going on is there's just a large rotation out of unprofitable growth stocks. And a year ago everyone was saying grow, we love it, and now they're saying they want to see stemmed losses. But I think good companies, if they have a playbook that they know is working and they're well capitalized to do so, they stick to that model, and that's what we're doing.
And fair enough, and we've seen other companies go down that same road. That's not without cost, Jason. I mean, your ads are everywhere. You can't really go anywhere without seeing a DraftKings ads. That has to be adding up with regards to costs. How do you keep that under control, if at all?
Well, it's the same story. We look at data and analytics for everything. If we're seeing that, paybacks are within our 2 to 3 year threshold, then we believe it's good spend, and that's what we manage to. And that hasn't really changed since we went public. So we continue to, I think, see the model working. We now are up to 5 states in 2021 that are contribution profit positive. There'll be another 5 for a total of 10 that we expect to be contribution profit positive in 2022. So I think that shows the paybacks are right in line with where we'd like them to be.
Jason, speaking of spending and growing, since you guys walked away from that Entain deal, there's a lot of questions about what your M&A strategy could look like moving forward, and also what that might look like in such a volatile market. How are you thinking of this and the significant amounts of capital to be deployed moving forward?
Well, I think that for us, M&A is very much, driven by strategy. And of course, it's harder to do in a volatile market. It's harder to do when your stock price is lower. So that certainly will affect the types of things we look at and the, likelihood that we would end up pursuing anything. We're very excited about the Golden Nugget transaction, which we expect to close soon. That's one that we feel will be very accretive and have very strong synergies. And I think generally we're more focused on organic growth than M&A right now, but, there's always an opportunity if the right deal comes along to take a look at it.
Let's talk about the organic revenue growth. You've talked about the New York, Louisiana markets. We're looking at new potential in Maryland, Puerto Rico, Ohio. What do those new markets sort of present for your top and bottom line?
Well, I think it's another collective, I want to say 7, maybe even higher percentage of the population. So obviously that adds to, an already, fairly large number of states and large percentage of the population that has online sports betting. I think that those, states all have very passionate fan bases that love sports, so they should be good markets for us. And we're looking forward to going and giving a great product experience to customers in each of those states.
What about some of the partnerships out there with the various sports leagues as well as some of the networks that broadcast those games here? Is there any sense here that you would want to deepen those partnerships or go even further to actual ownership of some degree of it or another?
Well, we're always looking at ways that we can form creative partnerships, as far as whether any of those translate into something more such as M&A, it's hard to say. But we're very pleased with the partnerships that we have with the various sports leagues. We have partnerships with really all major sports leagues at this point. We're also very pleased with the media and team partnerships that we have. For the most part, they're all performing very well, and we're excited that we have such strong support and a very strong ecosystem that we built up around DraftKings.
Well, there you have it. DraftKings CEO Jason Robins just about an hour ago with our team on Bloomberg Television. A lot of headlines from that, Katie. I should mention DraftKings stock down about 21.2%. Really been lower all day after the company reported that it added fewer new customers in the fourth quarter and projected that wider loss than Wall Street had expected. Here's what's interesting. 2 million monthly unique paying customers engaged with DraftKings during the fourth quarter. That's according to the company. Analysts were only looking for 2.1 million, so it wasn't that big of a miss there. We're going to have more on DraftKings in a few minutes, though. First, let's get to Washington, D.C. with Nancy Lyons. Hey, Nance.
Thanks, Tim. Moscow says it is planning to hold nuclear exercises to test ballistic and cruise missiles, and President Vladimir Putin is expected to supervise. Well, that's all renewing concerns Russia plans to invade Ukraine, despite arranging a diplomatic meeting next week with U.S. officials. President Biden will be addressing this situation in his speech at 4 p.m. Wall Street time today. You can listen here on Bloomberg Radio. Well, the nation's top health official has tested positive for COVID-19. Bloomberg's Nathan Hager has the story.
Surgeon General Vivek Murthy confirmed his positive COVID test this morning on Twitter. He says his wife tested positive as well, along with their 5-year-old son. This week, White House Chief Medical Advisor Dr. Anthony Fauci said the COVID pandemic in the U.S. appears to be on a sharp downward path. Dr. Murthy says his son has a runny nose and a low-grade fever, but is otherwise eating, drinking, playing with his sister, and watching his favorite cartoons. In Washington, I'm Nathan Hager, Bloomberg Radio.
The ex-police officer who shot and killed Dante Wright was sentenced today to 18 months in prison, 6 months on parole. Kim Potter says she mistook her gun for her taser when she shot the 20-year-old during a traffic stop. Wright's mom, Katie, says the sentence is a slap on the wrist.
We're very disappointed in the outcome.
Katie Wright says Officer Potter's tears must have had more of an impact on the judge than her own. Prosecutors wanted at least 7 years. Well, with no deal in sight, Major League Baseball has canceled spring training through March 4th due to the ongoing lockout. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Katie Greifeld and Tim Stenevec live in the Bloomberg Interactive Broker Studios. Katie, I've been dying to talk about this story, but first I want to ask you a question. What were you doing, this morning around, 7:30?
I was prepping for this radio broadcast. What were you doing?
Oh, okay. Well, I was tuning into this YouTube channel that live streams planes taking off and landing from London's Heathrow Airport. And I got to tell you, I saw this trending on Twitter. I wasn't even trending on Twitter, actually. I saw people tweeting about this.
Yeah.
And they were saying, so many people are tuning in. Somebody tweeted this live link, and it was pretty remarkable because there were wind gusts over 61 miles per hour generated by Storm Eunice. And throughout the time that I was watching, you saw planes trying to land in these extreme winds. And it was pretty remarkable because they would come in what appeared to be at an angle, and you would see them absolutely just these huge, multi-ton machines sort of being pushed through the air on their way down to the runway.
Yeah, that's Storm Eunice. She is no joke. And I just love when the internet in general unites over a common cause. In this case, watching these jets try to land. And Big Jet TV, that is what this channel is called. It's run by an enthusiast whose name is Jerry Dyer. It saw as many as 230,000, or I can't say words, Tim, 230,000?
230,000.
Okay, nailed it. That's how many viewers it had at one point, as people just watched this Airbus SE A380 double-decker. God, I'm really stumbling today. Try to land. And
obviously, you're not a pilot.
I'm obviously not a pilot, obviously. But yeah, I mean, I saw those tweets too. I don't know how I haven't actually seen the video at this point.
Well, it's funny because right when I tuned in, I got to see that Airbus SE A380 double-decker flying in from Doha by Qatar Airways. It was attempting, it did its third attempt to land, and it actually made it on that attempt. That's the one that I saw land.
And I guess that's why we're talking about it. This
it's
could
pretty
have
cool.
turned out very different.
Check out the story on the Bloomberg and at Bloomberg.com. You're listening to Bloomberg Business Week. This is Bloomberg.
analysis, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are lower, bonds climbing as we race toward the closing bell. 13 minutes to go ahead of a long holiday weekend. Do want to begin with a couple of headlines, though. The Purdue Pharma mediator says the Sacklers have agreed to boost the opioid deal. The Sacklers have offered as much as $6 billion in talks, in those Purdue talks, this according to the mediator. It has been a jittery week marked by a standoff between the West and Russia, along with those worries about the Fed's next policy steps. 10-year yield this Friday, 1.92%. The S&P down 27, down by 0.6%. Have been down as much as double that, down 1.2%, but again reducing that loss now to 25 points. We've got the Dow lower by 185, down 0.5%. NASDAQ is down 145, down 1.1%. Spot gold down 0.1%, $18.95 the ounce. West Texas Intermediate crude oil losing week there, down 0.2%, $91.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Inflation, like a full moon, seems to induce a range of manias. A proposal from Senate Democrats to suspend the federal gas tax offers a good example. Revenue from the gas tax goes into the Highway Trust Fund, which is the primary way the U.S. pays for surface transportation. But the tax, which isn't indexed to inflation, hasn't been raised since 1993, and the Highway Trust Fund faces a shortfall of some $160 billion over the next decade. A gas tax holiday would only compound this problem. By one estimate, it would cost the government around $20 billion and hasten the fund's insolvency by a full year. And for all that, it might save drivers a grand total of $2 a week. The Biden administration and Democrats should stop pretending a magical fix to inflation will materialize and instead stick to a simple principle: avoid making things worse. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. Time flies when you're having fun. We are less than 10 minutes away from the market close on this Friday before a holiday weekend. Stocks really bouncing around today, Katie. The S&P 500 down about 0.6% right now. The NASDAQ down just about 1% right now. Interestingly enough, the S&P 500 briefly did turn positive this afternoon, but is again lower. Let's try to make sense of it with Aaron Kennan, co-founder and CEO of Clear Harbor Asset Management. Clear Harbor Asset Management has more than $1 billion in assets under management. Aaron joins us on the phone from Stamford, Connecticut. Aaron, how are you?
Doing just great, Tim. Thanks for having me.
Help us make sense of
well.
what we're doing. Well, we have kind of some good vibes ahead of the holiday weekend. I got to be honest.
That's great.
But market not really feeling it. What's been happening here? Because I think a lot of our listeners, a lot of investors, are trying to figure out, okay, when is this choppiness kind of done, and we start to move back toward those highs that we saw in November?
Right. Yeah. I mean that we've been really trending sideways to downward since November, and I think the real story of the equity market is just general weakness, even beneath the headlines, which are weak in themselves. If you look at, whether it's the tech sector, which is seeing significant weakness across the board, particularly in sort of small cap, mid cap, but at the end of the day, we really attribute this to the understanding that the market has, which is this sort of record level of liquidity is finally departing the scene. And that's coming from both the Fed, which is poised to start tightening next month, and, of course, the fiscal side, which is, for the last 2 years, the fiscal stimulus was the size of the combined economies of the state of California, Florida, Texas combined. And that's essentially gone now. And so you have heightened volatility. and you have less liquidity, that tends to mean that price to earnings multiples are poised or at least at risk for contraction. That's what we've seen this year, where the S&P PE multiple has actually contracted 2.5 times, 2.5 points, now trading at about 19 times anticipated 2022 earnings. So while we do expect earnings to grow this year, that higher level of volatility, Tim and Katie, is going to certainly bring pause to investors.
And Aaron, with that type of setup where you are seeing PE multiples start to come down a little bit, I mean, do you view that as an opportunity at this stage, or do you think there's still more of sort of a revaluation to go?
Well, I think the technical backdrop, frankly, is still weak, but that doesn't always guide what we do. We believe in sort of disciplined in dollar cost averaging, depending on the types of clients that we have. But we're also very mindful of valuations across the marketplace. And there are certainly areas of real opportunity that we see, even within the equity markets. But it's hard to try to catch that falling knife. No one ever does that perfectly. As they say, only monkeys can pick tops and bottoms. And we sort of embrace that mantra and maintain our discipline across all asset classes for our clients.
Okay, so let's say a new client comes to you, or perhaps a current client that you have has some sort of exit. What's the strategy of introducing those assets into the market?
Well, we think about the long term. Most of our clients are busy professionals. They're trying to simplify their financial life. They're trying to make, they have sort of different buckets of assets, sometimes located all over their place, and it's part of our job to sort of bring some sense to the madness. And so, we're really thinking about, long-term anticipated returns of major asset classes and the mix of those asset classes and the anticipated volatility of each one of those asset classes to allow for them to achieve their long-term goals while also being able to sort of sleep well at night. And so this current market sort of speed bump that we're going through right now, we do think it has a heightened opportunity to last for a while, but it doesn't really change the sort of asset allocation process that we go through on behalf of our clients.
And Aaron, let's get more specific here. So being
Sure.
disciplined, the asset allocation process, when you look across asset classes from fixed income to equities, what do those different allocations look like? Where are you overweight? Where are you underweight?
Sure. Well, I think fixed income is interesting here because, of course, the anticipation right now is the Fed's going to raise rates 6 times this year and call it 2, maybe 3 times next year, and the curve is quite flat. We have a hard time believing that, particularly when even this week and last week there's been evidence that the economy is slowing down, that the inflationary peaks that we have been noticing over the last few months may be waning. The supply chain picture looks like it's, at least on the margin, improving. Shipping costs have been thawing. Business costs generally have been subsiding. And so we think the Fed may end up proving to be, at least relative to consensus, a bit more dovish over the next 6 to 12 months. And, that has an opportunity in some sense for us to maintain some exposure in the front end of the fixed income market. But we're guided by the benchmark, which is the Bloomberg Barclays Aggregate Bond Index. And so we need to always know where we're making our bets on credit exposure, on duration, and how that correlates with other asset classes in the portfolio.
I mean, Aaron, you said that you weren't in the business of catching knives, but when it comes to the front end of the yield curve, a little bit of a falling knife here.
Yeah, I mean, certainly, it's been an interesting market. And while we are sometimes on the margin tactical, we want to be mindful of where our bets are. And we think at 147 right now in the 2-year Treasury, with the market anticipating 6 rate hikes, that 2-year Treasury is pricing in almost a 100% chance that consensus is going to be correct. Our view is that may be just a bit too aggressive.
Hey, Aaron, just in the last minute that we have with you, we got to talk geopolitics here and help us understand, help our listeners and viewers understand Russia and Ukraine and the impact that it's going to have on markets.
Well, it's just another variable that certainly doesn't reduce volatility. It only increases it. Putin's a bad guy. He seems to have aspirations to expand the Russian empire, and this could have a rather significant consequence to the overall market, I think, in a couple of different ways. One, clearly volatility, but on the energy side, that's a huge question around, Nord Stream 2. Is it going to be dead? or not. Europe needs natural gas to provide electricity to the population. They've reduced their nuclear capability significantly in the midst of having the Russian noose around their neck for the last several years. So it's certainly a conundrum for Europe right now, and it's a real challenge for the world and for investors.
Aaron Kennan, we love it when you join us. Have a great 3-day weekend. Thank you so much for taking the time. That's Aaron Kennan, co-founder and CEO at Clear Harbor Asset Management, over $1 billion in assets under management. Katie, we are just a couple of minutes away from the market close here. In just a few minutes, we are going to be joined by our friends at Bloomberg TV for our countdown to the close, as well as our Beyond the Bell coverage. Stocks off their session lows. The S&P 500, though, still down 0.8%. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Rigg, Sonali Bassett counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast partners, Tim Stenovic and Katie Greifeld, in for Carol Masser. We welcome in all of our audiences across Bloomberg Television, radio, and YouTube. Tim, on a day that's certainly going to be a down day, a week that's certainly going to be a down week. The big question now, Tim, is what's actually being priced into this market as we head into a 3-day weekend?
Yeah, that's true. And also, what's the next catalyst to watch for next week? Perhaps ahead of the Fed meeting, what we hear from the Fed about interest rates. We are likely going to be hearing from more Fed speakers. Got to tell you, though, I'm still watching Bitcoin because...
Do we need more Fed speakers?
No, but
I feel like we've heard from a lot of them.
How coordinated do you think the narrative and the message is?
I don't think it's coordinated.
Not very, yeah.
I don't think it's coordinated at all. And I think it's causing a lot of confusion because, hawks are doves, doves are hawks. I don't know. Where are the owls? Remember the owls?
You're the owl.
I mean, that's what you're seeing play out in the equity market, in addition to all of these geopolitical tensions that we're trying to price through. I mean, you do have sort of, different noises coming out of these parade of Fed speakers. What I'm watching next week, I'm so excited to see those consumer University of Michigan inflation expectations. We know the consumers are really unhappy right now. It'll be interesting to see if those inflation expectations match up.
Before we even get to next week and to the Fed, we're going to be getting to a president as well, addressing some of the geopolitical concerns, which at least for today is something that the market is trying to digest and understand. We've talked a lot, Romaine, about the oil market implications, the equity market near-term reaction, but how that typically doesn't translate into long-term reaction either.
And we always have to keep in perspective here that a lot of what we're dealing with on a day-to-day basis, most of this damage had been priced into this market a while ago here. We're talking about markets that are firmly below their 200-day moving average, a NASDAQ that still remains in correction, and an S&P now that has a full drawdown of more than 9% from that all-time high. As far as your daily numbers, you got an S&P closing down 0.7%, or about 31 points. The Dow Jones Industrial Average down about 232 points, or 0.7%. The NASDAQ Composite, with that death cross, the 50-day moving average below the 200-day, down 1.2% here on the day, or 167 points. And as far as your small caps, your Russell 2000 looks like it's going to finish the day down by about 0.9%.
It's not too early for us to talk about year-to-date where we are, because I think a lot of people are thinking about, okay, when is the right time for me to start deploying cash, and when are we going to actually see the bottom in this equity market? The S&P 500 down 8.8% so far this year. The NASDAQ, though, down 13.4%.
I'm glad you touched on the NASDAQ. I want to touch on that just briefly. Before we enter today, 15% of stocks were only above the 50-day moving average. Only 35% were above the 200-day moving average when it comes to the NASDAQ 100. So that sort of shows the breadth of the sell-off that's underway. Let's get back to the daily moves for our radio audiences. We do the winners and losers on a sector basis. And while it's a lot more red than there is green, but it feels a little bit defensiveness. We've just durables, household products, food and beverage. Those are the sectors in the green, up about 0.3 to 0.6%. Everything else, though, is pretty much in the red. And you're really getting this rotation out of technology, Tim. That is what you mentioned. It's software and services. It's semiconductor equipment. And it is autos, as Romaine's Porsche are still burning in the Atlantic Ocean.
And it was a difficult day in equity markets. I did find some gainers, though. We have Dollar Tree. That was your biggest gainer in the S&P 500. That follows news that former CEO Bob Sasser, he's going to retire as executive chairman. Analysts say that raises the possibility of a settlement with activist Mantle Ridge. Traders welcome that news with open arms. Dollar Tree soared more than 5%. Ford also had a good day. Shares closed just below 3% higher, and we all know why. That's after a Bloomberg news scoop that the company is considering ways to separate its EV business from the legacy business. That boosted Ford shares by about 2.8%. And finally, Bloomin' Brands. You may know them as the operator of Outback Steakhouse. The company reported earnings, and the numbers were strong. And importantly, the outlook was good as well. That was good.
Do they break out how many of those onions they sell?
To Katie? How many they sell just to Katie?
They did not. Maybe I need to control F on the earnings release, but it was a good quarter overall, and that was good for a 7.6%
It's like
rally.
ARPU, right? Or
Yeah, absolutely.
Average price of bloomin' onion. Hey, let's talk.
Those are back, by the way.
You know, I picked a few decliners that are all down double digits. We've been talking about them all day. Earnings related, Roku having its worst day since 2018. Shares just tanked after that first quarter revenue forecast fell short. Fourth quarter revenue also fell short of analyst expectations, down about a little more than 77%, excuse me, from that July 2021 high. Redfin finishing the day down 20%. Company forecasted net loss for the first quarter was larger than the Bloomberg consensus. Handful of analysts cutting their price target. As a result, a couple downgraded their rating on the stock. And then we got to end with DraftKings down 22% on the day today, falling the most in almost 2 years. Price target at JP Morgan, Truist. Look, you guys talked to Jason Robbins. We played a little bit of that interview a few moments ago. It was interesting that he said that the company playbook, it's still working for him.
You know what's interesting, though, Tim, is we're going to fold in DraftKings, maybe Roku, back on over into the world of bonds, where I'm going to try to go next, is there is a very big repricing, and all the analysts on the street who cover those big stocks said growth at any price is no longer the game in town, and you do need to show some sort of path to profitability. Why? Because yields are still the focus, and this, of course, is sort of where yields are on the week. And what's interesting, I'll just quickly point us to the front end of that yield curve. Yields are actually down 3 basis points on the week. That's the first time we've seen a weekly drop in yields really all of this year, Romaine, as the narrative has been yields higher.
Yeah, yields higher as, of course, everyone started to price in what the Fed is going to do. I guess the question is, the geopolitical issues that seem to have driven the flight into some of these haven assets, how quick does that get unwound if there is some sort of diplomatic resolution to this?
Yeah, and you think about how interconnected all of these markets are right now. You're talking about the yields and the relationship to the equities. When we talked to the DraftKings CEO, he said that M&A was going to become harder. And while he invested in growth last year, investors are not rewarding that now. So how then, if you bring that across corporate America, stops M&A, starts to hurt hiring, and start to keep that ball rolling in the other direction.
I have a question for Katie here. Katie.
I want to answer this question.
Thank you, Katie. I mean, as our chief Gen Z correspondent, who, by the way, is in fit for the military.
I'm a millennial.
I would like to point out, you're a millennial?
I'm a millennial,
No way.
I swear to God. I promise you.
Stop it. In all seriousness, though, I mean, when you look at some of the moves that we saw in the crypto space this week, which was kind of no moves. I mean, we started off, it looked like crypto was kind of moving higher earlier in the week, and then it dropped down. And I'm curious about some of the correlations that we talked so much about a couple of weeks ago, whether those correlations with equities still is intact.
It's still intact, but this time it really seems to the detriment of crypto, not just in the fact that they move together, but also all of the action is in the equity market right now. We were talking about this earlier in the week, and Tim and I were just speaking to Jutha Chow of Kraken that a lot of people, a lot of these day traders that really pumped crypto over the past 2 years, they're finding opportunities elsewhere.
That's a very Gen Z thing. What is Gen Z then? Who's Gen Z? Are you Gen Z, Shanali?
No, I'm also millennials, like the lost generation, unfortunately.
Yeah, right. We get so much attention.
Oh, Tim, you're
Nobody
a millennial?
really
I'm what's referred to as a geriatric millennial, so I should probably sit this one out.
I'm like the middle child here.
We got to get a Gen Zer on here, but point being that you are seeing people sort of migrate from crypto. That's probably not a great news for all of the exchanges.
Is the NASDAQ still more volatile than crypto?
I have to rerun my spreadsheets, but anecdotally.
Are bonds more volatile than crypto?
Well, where's the bond crypto correlation, the inflation crypto correlation these days?
I don't know. Can someone do a chart and put the money supply over that, and then we get
we're going
to get a lot of tweets.
That's exactly what Jutha talked about with us, because think about the way that the narrative has shifted, right? Caroline had that great chart yesterday that showed the divergence of Bitcoin and gold, right? So it's not digital gold, but Jutha did reference the idea that she ultimately does believe that one day, Romaine, it could be an inflation hedge.
Yeah, I mean, we joke obviously a lot about about crypto and the way, look, there's a different narrative for crypto every year here, but I mean, there's certainly some credence to the idea. As somebody who, kind of started his career covering precious metals. I mean, look, you can make something out of anything and ascribe value to anything.
Can I say something that will make this whole desk
crypto.
laugh a little bit? While Caroline is off today and I'm sitting at her desk, I'm reading about NFTs in the breaks. So I feel like I'm channeling her in here a little bit.
We can always have a little extra crypto.
When do NFTs become a store of value?
That is the question the world wants to know. But I do want to put on my crypto bullish hat and just say that a lot of the advocates who are, advocating that Bitcoin is an inflation hedge, they would say there hasn't been enough time to basically zoom out. I mean, Bitcoin, it's only been 14 years since it was created that, if you just hodl enough.
That's a Gen Zer, right? Well, yeah. So I am curious. Go ahead, Tim.
Well, I was just going to say, we haven't heard a lot lately about crypto desks doing hiring at some of the big banks the way we heard about it when crypto prices were at record highs.
We talked to somebody a little bit earlier today from Galaxy Digital, which is a much smaller company.
But, that's Galaxy Digital. I mean, they're
I will
totally
say, though, the
focused on
crypto M&A, it really hasn't slowed down, which has been remarkable to me. It feels like you see all these funding announcements every single week, and it's still a very hot space. And you're seeing that in the broader M&A market, too, that even with this volatility, not a lot of deals have been pulled, it seems like.
You know what's remarkable is we'll probably have something to talk about when it comes to crypto on Tuesday because it does trade even over a holiday weekend. So.
Who's your favorite president? You have to celebrate President's Day on Monday.
We don't get political here. Okay, Romaine, who's yours?
Oh, thank you.
Okay, that is going to do it for our cross-platform coverage on TV, radio, and on YouTube. Have a great long weekend, everyone. Enjoy the holiday weekend. We're going to see you same time, same place on Tuesday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Broker Studio in New York. I want to run through, Katie, the 5-day, the numbers here for the week, because we are seeing another down week for U.S. stocks. The Dow finishing the week down by 1.9%. The S&P 500 finishing the week down by 1.6%. Interestingly enough, if you would have asked me before I ran this calculation on the Bloomberg, I would have thought the NASDAQ was the underperformer, but it finished the week down by 1.8%. Let's head now to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. We are waiting to hear from President Biden on the situation in Ukraine. He is expected to discuss ongoing U.S. efforts to pursue deterrence and diplomacy, given Russia's buildup of military troops along the border of Ukraine. Bloomberg's Washington correspondent Joe Matthews says the president will need to be careful with his words.
This is a president that does not like what he's hearing and doesn't believe the message that's coming from Moscow in terms of pulling back, but also needs to reassert his message that there is a diplomatic path here, that they would prefer to talk this out, knowing, of course, that Secretary of State Antony Blinken will be sitting down with Sergei Lavrov next week.
Again, Bloomberg's Washington correspondent Joe Matthew. You can hear more with Joe on Bloomberg Sound On tonight at 5 p.m. Wall Street time on Bloomberg Radio. The former suburban Minneapolis police officer who said she confused her handgun for her taser when she fatally shot Dante Wright has been sentenced to 2 years in prison. Wright's mother addressed the court ahead of that decision.
I refer to her as defendant because I will not give her the respect of calling her by her name. She referred to Dante over and over again as the driver, as if killing him wasn't enough to dehumanize him.
Again, that's Katie Wright, who lost her son Dante. Prosecutors had sought a 7-year sentence. Conservative Minnesota Congressman Jim Hagedorn is dead at the age of 59. His wife confirmed the news on Facebook that he'd lost his long battle with kidney cancer. She says he passed away peacefully last night. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Katie and Tim.
Thank you so much for that update, Nancy Lyons. I do want to say that we are expecting President Biden to speak to us, to give us an update on our continued efforts, or I should say the United States' continued efforts to pursue deterrence and diplomacy, also Russia's buildup of military troops on the border of Ukraine. The president will be doing that live from the Roosevelt Room at the White House. We will bring that to you live when we get it. In the meantime, though, as we wait the president, I want to bring in James Tarmy, who's an arts columnist for Bloomberg Business Week. James joins us on the phone from New York City. James, I saw this story cross this morning, and I immediately said, we have to get James Tarmy on Bloomberg Business Week Radio to explain what exactly is happening and talk about it. DuPont heiress is sued by museum that alleges she took antiques. What's going on here?
It's quite a story, and the long and short of it is that this woman named Sabrina DuPont Wangenegger, whose father was William K. DuPont, was gifted, she says, a series of objects in 2019. Well, her father died in 2020, and it turned out that there was a codicil to his will that said that some of these objects were supposed to go to this museum called Winter.
Okay, wait. I just want to jump in.
Sorry,
Codicil. A codicil. What is that?
Yes. So they're basically just think of it as like a little amendment to his will that says, by the way, I want X number of objects to go to this museum.
Okay.
And the museum is actually a museum that was founded by a member of the DuPont family. This is a sprawling, very wealthy, very old family. And they had a long history of giving objects to Winterthur, an independent institution, but the family had been very involved in it. Long story short, she realizes, oh, wait, I should back up. If the objects in the will are sold or given or gifted, great. No one is under any obligation to give them back. It's just, if these things are still part of my estate, they can go to the museum. So, father dies. She informs the museum that there's one thing left in the will, rather in the estate that was in this kind of codicil. And the museum says, great, thank you. Takes the thing, takes the object. That's that, until there's a major auction of this guy's estate. And the daughter had included some of the objects she'd been gifted. The museum says, wait a second. You said that these weren't part of the estate. Now you're selling them. We want them back. There's a lot of twists and turns, but what the real takeaway is, get your affairs in order, because frankly, there's no way for the daughter to really prove that she received the gift because it was father to a daughter. Yeah, sorry, I'm talking a lot, but it's
well, you need to, because it's a really complicated story that involves codicils and wills and antiques.
That's a new word for me. Codicil.
It's a new word for me as well.
I
After reading this,
before.
and there's a whole part about the codicil in this story.
And I mean, James, do we know what objects that we're arguing over? Because, okay, so the lawsuit says that, she attempted to sell 5 antiques valued at roughly $200,000. What are these antiques? Do we know?
So, yes, they're pieces of kind of American decorative arts. So there are various pieces of furniture, but then there's also some documents that had historical significance. The thing to remember about this, though, is that it represents a very small fraction of the overall estate. So the auction of this man's belongings brought in close to $7 million.
Okay.
So what they're arguing about represents maybe 3% of the overall estate. And I spoke with her after we kind of discovered this suit, and she said that the entire process was utterly absurd because it represented such a tiny part of the estate that she told the museum about the existence of the will. She didn't really have to tell them if she was trying to defraud them. So she's sort of outraged about this, and rather than settle with them, she is actually fighting because she feels like this is a real sort of slap in the face, given her family has given many millions of dollars to the museum over the years.
Well,
so
that's what I wanted to talk to you about, because she told you in an interview that she's very saddened by this whole situation, quote, "I will absolutely defend my integrity, which I feel has been called into question, and I will absolutely defend my father's wishes." So it's not about the actual stuff for her, right?
Quite right. And
Is it about that for the
one
museum? Sorry, go ahead, James.
I don't. The short answer is for the museum, I don't know. They issued a statement and wouldn't comment on the record. But there are court documents that you can go through that are part of this suit that the museum filed in Delaware court. And in these documents, you can actually see correspondence from them. And they are very, very careful in their correspondence with the estate and with the daughter to say, listen, we're not calling your integrity into question. We are not calling you a liar. We're not saying that you stole these things. However, we as an institution have a fiduciary duty to ensure that we are following up on this because this was gifted to us and we can't just walk away from it because you say it's yours. So it's actually, in a certain respect, not really about the money from an outsider's perspective. It doesn't seem like it's about the money from either side because, of course, Winterthur Museum has around 90,000 objects in this exquisite 175-room mansion on 1,000 acres of manicured gardens. It's really exquisite. This is in Delaware. But I think neither party is particularly avaricious and this is from an outside perspective. Neither seems desperate for the money. Instead, they both seem to be, at least on the outside looking in, pursuing it on principle.
James, what is your best guess about how this ends? I mean, is this museum going to end up with these objects at the end of the day?
You know, I really can't say. What I can say, you know, I mean, I'm not a legal expert on the state law. What I can say is that both sides appear to have equally compelling claims. You know, in the sense that there is ample documentation on the daughter's side to demonstrate that these were a gift, but it's not rock solid documentation. So it's not like she has a smoking gun, and if she did have a smoking gun where she could produce it, the museum wouldn't have brought the lawsuit in the first place. So you have on the daughter's side a long history of the father giving her gifts, and you have the father actually having revised, and this is where it gets even thornier, the father then revised what he wanted to give to the museum 3 years later, and then entered into a separate promise gift contract where he included some of the stuff he was going to give, but not other stuff, which the daughter says demonstrates that he had changed his mind and wanted to give her these gifts in the first place. But there are a lot of twists and turns, as I said earlier, but I think that it actually has much broader resonance for those of us who are not members of a sprawling billionaire family and those of us who do not run museums, which is that, you know, oftentimes there can be informal interactions and transactions between family members, but if family members have obligations to other institutions, when that dies, you have to issue some level of accounting for the things that you have. And this is not just a question that is facing the very wealthy or even the moderately wealthy. This is something that faces, or that many people who will be receiving things in their parents' or spouses' estates need to actually keep in mind. And that's why I think that this is such a kind of compelling case, even though the actual stakes in terms of dollar amount are actually quite small.
Yeah, that's a really good point, James, because that's something that we hear a lot about, especially with the wealth transfer that's happening between generations and the historic wealth transfer that's set to happen as, you know, the greatest generation ages out, and indeed baby boomers do as well. James, before we go, forgive me because I know that you're the arts columnist, and I'm wondering how often you cover stories like this, just in the context of Katie asked what's next, how it ends. I want to know how long it could take, because these things can be tied up for a long time, right?
Oh, absolutely. Unless there is some settlement, this could easily take years, and it really depends on how malleable or how willing to reach a compromise either party is. And I think at least, again, I didn't actually speak to the museum on the record, so I can't actually speak to this. But from the daughter's side, she isn't budging because she feels like she is in the moral and legal right. And so there's a strong possibility that this ends up going to court.
So, James, what comes next in the process here? What are you going to be looking out for as you continue to follow the story?
Well, there's going to be discovery, so they will actually, both sides will actually keep adding documentation to the case. There will be yet another affidavit from the daughter. The museum will continue to add documentation in what's in a kind of process of exploration, and then if necessary, we'll go to trial. And that's sort of what I'm waiting on and what we'll be watching.
And James, the woman at the center of this, Sabrina DuPont-Lonenegger, can you talk a little bit about the way that her dad's estate kind of changed from being overseen by this family office earlier in his life, but then toward the end of his life, he didn't have that same infrastructure?
Yeah, so I can't speak too much to it, but what I can say is that she basically talked about him kind of scaling back his business activities, and as a result, he had less of a need for a very kind of a large office to manage his affairs. So they had family advisors still, including a family lawyer and a family accountant, but not people who were kind of permanently on the payroll. And so, he was a person, her father was a person who bought and sold and traded antiques as a hobby constantly. And, he collected one of the preeminent collections of Chippendale furniture and then sold it all in the 90s when he, or sold most of it in the 90s when he became interested by something else. And she told me that, he had a very fluid idea of collecting, which is that he didn't just want to buy it and hold it. He was always on the lookout for something better than what he had. And when he found that, he wouldn't keep the old thing. He would sell it, he would move on. And so, that is, he was a man of substantial means. And that was totally possible, but it meant that when he died, because he didn't have this family office infrastructure in place anymore, it meant that she was in charge of dealing with this pretty vast amount of objects. She told me that there were at least 1,500, maybe more. He had a gentleman's farm in Delaware, and it was a monumental undertaking because she was basically, she told me, doing it on her own. And this, once again, gets back to this idea that this has resonance for a broader audience because it's really about trying to make sure that there is some level of not only documentation but accounting of objects. And frankly, I don't think I know a single person who has inventory lists of their belongings. It's just not how most people I know, even people who have lots of stuff or lots of collectibles or artworks, really work. And I think that it can be a wake-up call when you actually hear about this.
Well, James, it's not just kind of, you don't want to make that call, get in touch with a lawyer, but you'd also, people I don't think want to think about mortality, right? And how things go at the end. James, this was a really fantastic deep dive into a story I had no idea about. We really appreciate you taking the time and giving us all the details on it. James Tarmy is arts columnist for Bloomberg Business Week. You got to check this story out. It's available online and on the Bloomberg terminal as well. James joining us on the phone from New York City. Let's get now to Charlie Pellet, who's standing by to give us an update on all the after-hours market action. Hey, Charlie.
Well, hello there. Down day on Wall Street, losing week as well, and should mention that we are awaiting remarks from President Biden. We will have have those for you live coming up right here on Bloomberg Radio. For the week, the S&P 500 index dropped down 1.6% this week. The Dow was down 1.9%. NASDAQ this week down 1.8%. Stocks fell today. Bonds climbed at the end of a jittery week that was marked by tension between the West and Russia, as well as worries about the Federal Reserve's next policy steps. Aaron Kennan is CEO at Clear Harbor Asset Management. We asked him about the market sell-off and dip buying.
It's hard to try to catch that falling knife. No one ever does that perfectly. As they say, only monkeys can pick tops and bottoms. And we sort of embrace that mantra and maintain our discipline across all asset classes for our clients.
He was interviewed right here on Bloomberg Business Week. S&P lowered today by 31 points, down 0.7%. Again, another losing week for the S&P. The Dow down today by 233, down 0.7%. NASDAQ down 168, a drop there of 1.2%. 10-year yield 1.91%. Spot gold today down 0.1%. $18.97 the ounce. West Texas Intermediate crude down 0.1%. $91.69 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I do want to note that we are awaiting President Biden to provide an update on the United States' efforts to pursue deterrence and diplomacy about Russia's buildup of military troops on the border of Ukraine. He's going to be giving that live from the Roosevelt Room at the White House. We will bring that to you live when he starts to speak. In the meantime, though, let's try to understand what exactly is happening on the border of Ukraine, the options the United States and international community have, and more. We're going to do that with Bill Ferries, National Security Team Leader for Bloomberg News. He joins us on the phone from Washington, D.C. Bill, we spoke to you earlier this week. What have been the major changes and the major updates that happened today? And look, we can connect this to the equity markets today and what we saw in both the equity and in the bond market today, because we saw a sell-off that many analysts tied to the narrative around geopolitical concerns over Russia-Ukraine.
Right. It's really been a wild week. And every day, I think, has seen a lot of volatility in terms of the geopolitical noise and how that's been affecting the markets. It's been a busy day in Europe on the diplomatic front. We've had a lot of the foreign ministers from European nations and Secretary of State Anthony Blinken and the Defense Secretary all in Europe meeting, and Ukraine is the biggest thing on the agenda. The U.S. came out today and said that they think when you add in all the military troops, all the personnel, separatists who are in eastern Ukraine, that Russia has about 190,000 personnel in that region. And that's the first time we've gotten any kind of number like that. You had a number of nations coming out today, the U.S., Germany, Ukraine, saying that the technical evidence suggests that Russia was behind a big cyber attack that hit some Ukrainian banks and government ministries this week. But on the other hand, you have a firming up of some plans for the U.S. and Russia to talk next week as well. So very much mixed signals. And I think as we head into what is normally a holiday weekend here in the United States, you saw that in the markets where people maybe didn't want to take on too much risk with 3 days coming in which it would be hard to get rid of assets in case of a problem.
And ahead of those talks next week, I mean, what kind of tone would you anticipate that, U.S. President Joe Biden might strike at this upcoming meeting or this upcoming speaking?
Well, you look at what the tone has been over the last, I think, 36 hours. I mean, the U.S. started using the term of the threat of an imminent attack. And that was something that they had shied away from. So it will be very interesting to see if President Biden sticks to that line, or if he shows any sense of tensions easing, if he talks more about the diplomatic road ahead. But we really haven't seen the U.S. giving a very optimistic view in recent days. They've taken, I think, a far darker turn in terms of where they see this going. Russia, of course, continues to say that it has, no plans to attack. A key date for us all this weekend is the 20th, Sunday. That's when Russia said a lot of these military exercises, particularly in Belarus, would be winding down and troops would be returning home after that. So it'll be interesting to see whether Russia sticks with that, how many troops they say are involved in exercises and can now go home, or if we wake up, Monday morning and there's been no troop movements at all.
Bill, I want to go back to something that we spoke about earlier this week when you joined us, and that's about the actual power of deterrence that the United States and rest of the international community, mainly Europe and NATO, actually have. What can they do? I mean, how damaging could sanctions be and what could they do short of military force?
Well, they can really try to isolate Russia's financial system from the dollar system, from international markets. They've already said that if Russia attacks the Nord Stream 2 pipeline, which was due to come online in a few months, will not be operating. That would be a big revenue generator for Russia. But then, on the other hand, you have Europe still very much dependent on broader Russian energy supplies. And there's a lot of nervousness among U.S. allies about whether energy can be exempted from any penalties. So on top of all that, you have Russia having prepared for sanctions, of course, by building up its foreign exchange reserves, becoming more reliant on the internal market for selling bonds. So they have tried to prepare for themselves. I don't think we're going to fully know until we see it happen, if it comes to that, how severe these sanctions will really be.
Yeah, I mean, as a former FX reporter, the de-dollarization of Russia's reserves has been really fascinating to watch over the past few years. But, Bill, I want to get your perspective on, how drastic a move of sanctions would be for the U.S. to make, because obviously the threat of sanctions has really rattled the oil markets in the past few days. But, how willing would the U.S. be to use that as a tool? I mean, is that, a last resort, or is that something that, is far more likely?
Well, the U.S. officials we talked to say that, unlike, I think, in past crises, at this time they promised that sanctions will come in at a very high level from day one. And the U.S. can invoke a lot of sanctions on its own. We've seen it do so with countries like Iran. It's done so with Syria and some other outliers. So they say there will not be kind of incrementalism where you start low and you try to then ratchet it up as things get worse. They say it'll come in high and stay there. On the energy front, they say that they've worked very hard to try to find a way to boost supplies from other nations, so Europe doesn't get totally left in the dark. But there's not a lot of confidence that there really is a lot of extra supply out there at the moment.
Hey, Bill, everything in Washington is political, and I'm wondering if we're seeing a moment of unity with Democrats and Republicans who are sort of standing by, saying that, this approach that the administration seems to be taking, that's the one that is seeing broad support on Capitol Hill. What are your sources telling you?
Yeah, I think that's right in the sense that, you really don't see Republicans criticizing Joe Biden for his policy against Russia on this issue right now. I think you'll hear people say, the administration didn't move quickly enough, but it has taken a fairly tough approach by I think, the standards of people in both parties. There will be people who say, listen, the Biden administration got burned in how the Afghanistan withdrawal played out, and they realized that and couldn't handle another kind of crisis like that on their watch. So that motivated them. But I do think it's right. There is unity. I think that kind of unity could disappear pretty quickly if this turns into a war and you have refugees from Ukraine flowing into other countries or something like that, and it gets a little bit harder to maintain, to keep everyone on the same page. But for now, I think generally Republicans seem to be mollified by this administration's approach.
We'll play that out a little bit for us just in the last minute that we have with you, Bill, as we do continue to await President Biden, who's going to bring us the latest on the U.S. approach to Russia and Ukraine. Help us play this out over the next few weeks and really the different ways that it could go. And obviously we're not speculating here, and we can't speculate too much, but where are you going to be looking for developments?
Well, I think, we want to see, first of all, we just want to get through the next few days and try to get to that meeting that we expect next week between Secretary Blinken and the foreign minister. I think on the U.S. side, we've reported this, there is a hope that you somehow keep diplomacy going long enough so that the conditions for an invasion get worse. As we get towards the spring, we get towards mid to late March, you have a thawing in the mud there. It makes it a little harder for some of the tanks to get through. It makes it a little bit harder for an invasion force to head in. It will be a long time for those soldiers, those Russian soldiers who are deployed on the border, to continue staying there. So I think the U.S. goal is find a way to continue to get keep the Russians talking. And, you know, that may involve a lot of these high-level meetings on a weekly basis. It could involve President Biden and President Putin finding another time to meet.
Wow.
That's how you know we'll be maybe muddling our way through this.
Okay, Bill Ferries, you help us actually clear the muddle, so we really appreciate it. Bill Ferries is National Security Team Leader for Bloomberg News, joining us on the phone from Washington, D.C. Let's now stay in Washington, D.C., and check in with Nancy Lyons for an update on world and national news. Hey, Nance.
Hey, Tim. Well, we are waiting for President Biden to update the nation on the Ukraine crisis, and it will be carried live here when it happens. Fears of an imminent assault rose today when the Russian-backed leader of a separatist-controlled area of eastern Ukraine said officials there were launching a mass evacuation of civilians into neighboring Russia. Secretary of State Antony Blinken is in Germany, where earlier today he said it's important that our allies stay united with us.
I think President Putin's been a little bit surprised at that solidarity, at the way that NATO has come together, the European Union has come together.
Blinken has agreed to meet Russian Foreign Minister Sergei Lavrov next week under the condition that Moscow refrains from attacking Ukraine. Former President Donald Trump has been handed another loss in court. He has failed to persuade a judge to throw out a lawsuit by House Democrats who accused him of helping to incite the January 6th insurrection. U.S. District Judge Amit Mehta today rejected Trump's claim of immunity, saying in his ruling, Trump's words during the rally ahead of the riot were likely words of incitement, not protected by the First Amendment. California Governor Gavin Newsom says he supports legislation allowing private citizens to sue gun makers. He says the new bill will allow individuals to enforce the state's assault weapons ban, similar to how Texas allows individuals to sue abortion providers. Newsom also says the state legislature is working on other bills addressing gun violence, including ghost guns and background checks. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Now back to Tim and Katie.
Thank you so much for that update, Nancy Lyons. Well, I've been really looking forward this week to speaking to our next guest. She's got a really, really interesting background. She's an entrepreneur. She's a best-selling author. She's a keynote speaker. But before this, she was a refugee from the former Soviet Union, coming to the United States at just the age of 13. She's also worked at places like McKinsey & Company and Microsoft and more. Her new book is called The Awesome Human Project. Break free from daily burnout, struggle less, and thrive more in work and life. Natalie Cogan joins us now. She's the founder of Happier Inc. as well. She joins us on the phone from Boston. Natalie, how are you?
So thrilled to be here. Thank you.
Well, we're thrilled to have you. Before we talk about the book, I just want you to take us back to that moment that you realized you wanted to sort of make this change in your life, because you have these experiences that I think a lot of our audience has, working for large firms, working in the consulting business. What was happening in your life at that point?
Yeah, it's a great question. You know, coming here as a refugee, I have the American dream. You know, my parents sacrificed everything to bring me here, so I had the American dream, and here I was. I didn't speak English when we came, and here I was at McKinsey, and I was in venture capital at the age of 25. There's fewer than 6% women in VC. I was, you know, doing really meaningful work, but always at the expense of myself. I really believe that emotions have nothing to do with work. I kind of followed that old school adage of leave emotions at the door. No one ever talked to me about that. And so I had achieved a tremendous amount of success, but inside I was really struggling, and just overwhelmed and exhausted. And as a leader, in all these companies, I always thought my job was to pretend that everything was amazing, no matter how I felt. And it got to a point where I couldn't hold it all in anymore. And I, several years ago, went through a really severe burnout, which is something I know a lot of folks relate to right now. And that got me to a place where I couldn't just will myself through anymore. I couldn't just push it. I couldn't grit my way through. I was really good at grit, but I had to, for the first time in my life, recognize that it's not enough to care about your work. It's not enough to care about your team or your organization. You can't give what you don't have. You have to cultivate your own emotional and mental health in order to really show up. And so I went searching. I did a tremendous amount of research and just to help myself heal, and ended up developing a method that I now get to teach to others, which is a great honor.
Well, let's talk about that method, because, I mean, personally speaking, I would love to know, how do I break free from burnout? How do you prevent it from happening? And if it's already happened, I mean, how do you bounce back from that?
Yeah, it's a great question that I'll try to answer as short as possible. So just to get to the second part first, if you are really feeling on empty, some of the signs of burnout are feeling really depleted of all energy, starting to resent work that you otherwise liked, withdrawing from social interactions. These are all things I'd experienced. You're probably in that place. And so if you're in that place, the thing I want you to please hear is that you can't just ignore it and make it through. You have to pause and think about, how do you make your emotional fitness, your well-being, how do you make that your daily priority? And it doesn't require you resigning. It doesn't require you throwing everything out the door. It requires things like, okay, when do I do something that fuels my energy? How do I take a break? How do I do something that fuels me as a person unrelated to my work? And so if you're in that place, you really have to make that a priority. To not get stuck in that cycle of daily burnout, to not get there, it's a connected answer. But the first thing to recognize is you and your job are two separate entities in a relationship with each other. And just like we know for any healthy relationship with another person, each person really needs to fuel themselves to show up fully. You can't over-rely. Even if your job is really meaningful, that doesn't mean it can give you everything you need, including rest, because you're a human being, and energy. And so just that construct to think about, this question that I've been offering to people is, how would I describe my relationship with my job? Because one of the misconceptions about burnout is it happens when we have too much work.
Right.
Having too much work is just one of the many, many factors.
Hey.
And others... Yeah, go ahead.
Natalie, I just want to jump in here with a couple things. One, we are awaiting President Biden, so we will be going to him when he does start to speak, to give us an update on the situation on the border of Russia and Ukraine. But Natalie, I want to talk about the pandemic, because the idea of burnout really, I think, shifted a lot over the last couple of years, as many have been stuck at home. Many people now working from home, or attempting to work from home. How does that shift the idea of burnout? And what are the types of breaks that you can take if you roll out of bed in the morning and you jump on Zoom and you're doing that until dinner time?
Yeah, the boundaries have all blurred for all of us who I've said lucky enough to work from home. And there's a couple of tips that I just want to offer really concretely. So it is really important to get disciplined about taking breaks. And it is, we do have the capacity. Microsoft just released a study where they looked at just taking 5-minute breaks between meetings dramatically reduces stress and emotional exhaustion. So having the discipline that, okay, I'm done with this meeting, I'm going to get up out of my chair, I'm going to, even if you have to walk around the room or go to another room in the house, if you can at all take a walk outside. So taking those short breaks is really essential. It helps the brain reset. The other thing that I really recommend is to create these disciplined, both emotional and physical boundaries. So instead of jumping on Zoom as you roll out of bed, take a moment, and one of the emotional fitness skills I teach is gratitude. Take a moment, write down 3 things you are grateful for. What it helps you do is that practicing gratitude reduces stress. It helps you not ignore the good things in your life, which otherwise your negativity bias ignores. And it's a way to center yourself and fuel yourself before the work takes over. So beginning your day with gratitude. At the end of your workday, to have some kind of a little tiny ritual to transition from work to, I'm now going to focus on my family or myself or my friends. So, for example, something as simple as closing down your computer, turning the lights off in the room where you're working, and walking outside maybe to get some fresh air, or leaving your phone and closing the door. Our brain responds to these kind of physical cues, and creating some of those boundaries really helps the brain to disconnect and have those separations, so we don't continually just think about work and just get stuck in that cycle.
And Natalie, something that caught my eye in the notes you sent us before the show is that, you should shift from harsh self-talk to self-compassion. And that caught my eye because, that's something that, I struggle with too. So I would love to hear some tips on how you do shift that kind of that self-talk, that inner monologue into something that's a little bit more positive.
Well, first of all, I just want to say I love that you brought this up, because when we think of burnout, we think of external things, and actually things like the way we talk to ourselves, the way we look at the world dramatically impact our risk of burnout. So a couple of really concrete tips. So a practice that I use is when you notice that you're talking to yourself in a harsh way. We all know that inner critic chatter. Take a pause and then imagine that you are talking to someone you really care about, a partner, a child. I usually imagine my 17-year-old daughter Mia for this, and then rephrase what you just said as if you're talking to them. And research shows that when we talk to ourselves in a supportive way, it improves motivation, it improves focus, it has the same positive benefits as when a friend is talking to us in a supportive way. And the opposite is true. Talking to ourselves in a critical way dramatically increases stress. So again, it's this practice of recognizing when you're being harsh and then imagining you're talking to someone you care about, because we naturally are more compassionate towards people we care about than ourselves, and reframing what you just said to yourself as if you're talking to that person. It's a really, really powerful practice. But as I always say, the goodness is in the practice. So it's not about doing it once and then the self-critic has gone away.
I was going to say easier said than done, right? Because old habits die hard.
Yes, and so this is why I talk about all these as skills. A skill, you improve a skill by practicing, right? Any skill, writing, running, right? The more you practice, the better you become. But if you stop practicing, it's not so great. So I think for me, after I burnt out, it was actually very empowering to recognize that these emotional fitness skills, some of which we've talked about, like I can practice them. I have some control and they help. And so the same, to your question, the more you practice, the easier it does become. It becomes more intuitive. You have access to that practice easier. But yes, I'm not going to sugarcoat it. Old habits die hard. I was 40 when I started to practice.
Hey, if you're just joining us, we're speaking to Natalie Cogan, founder of Happier Inc., also the author of The Awesome Human Project, Break Free from Daily Burnout, Struggle Less and Thrive More in Work and Life. Should also note that we are continuing to await President Biden. We are expecting him to speak any moment now from the Roosevelt Room at the White House. We will bring you those comments live when he does start to speak. Natalie, what are the small moves that we can make? We talk about this idea of incremental changes, right? What are those small moves that we can make, that we can start doing now to help us get to that place where we actually do get closer to becoming, more of an awesome human?
Things. And the first thing I just want to say, both parts are important. It's awesome and human. So we all have this capacity to do great stuff, to do meaningful work, to be a positive impact, but we're human. That means we need rest. And we need to take care of ourselves, and we're not going to do it perfectly. So it's both of those. It's really embracing both of those. But a couple of things. The first is to recognize that you can't give what you don't have. I spent so much of my career as a leader and my life as a mom as a martyr, really believing, as I mentioned, that it didn't matter how I felt, that I could just continue to positively impact my team. You can't give what you don't have. So just understanding that fueling your emotional, mental, and physical energy is your responsibility, and then making that a priority. So when you make your to-do list for the day, put one thing on your to-do list that you can do to fuel your emotional, mental, and physical energy, which is, by the way, how I define self-care. So put one thing every day on that list. The second is recognize that your brain is not here to make you thrive. It doesn't care about your happiness. Your brain is here to survive. So we have to course correct some of the unhelpful thoughts that our brain gives us. We just talked about endless self-criticism and how we shift that. But there's this practice of just editing our thoughts, recognizing that you are the editor of your thoughts. So if your brain is telling you that this is never going to happen, or this is not going to work out, or ruminating on worst-case scenario, which has been very common in the pandemic, because uncertainty is very hard for the human brain, being the editor of that thought and asking yourself, well, is this thought true? And does believing this thought, is that helpful? And doing that on an ongoing basis. And one last thing is to remember to practice your joy. I think we live in a world that's kind of taken the oomph out of joy. It's become something that's a luxury, but joy is not luxury. It is our life fuel. So making it a priority to do something outside of work that brings you joy, because not only does it make you feel better, but it's contagious. Emotions are contagious. Human emotions are contagious. So when you fuel yourself, when you do something that brings you joy, you actually spread that to everyone around you.
And Natalie, I think a lot of people would say, you know, I want to do that. I want to practice self-care. I want to inject some more joy into my life. But, you know, I don't think my boss would be on board that, you know, even if I tried to set boundaries, they might not be respective. I mean, what would you say to those people?
It's a great question, and you know, so much of my work is with companies. I work with companies and teams, and this comes up a lot. And the first thing I would suggest is have the conversation. Don't assume that your boss knows how you're feeling or that they understand where the boundaries need to be. Have the courage to have the conversation, and have it from the point of, listen, here are some things that would be really helpful to me. For example, to not have this meeting scheduled every day back to back. To not get last-minute to-dos on a Friday afternoon, and I'm not sure when the deadline is. It would be helpful to me because it would make me better at what I do. So have that conversation from that elevated place of recognizing that your boss is not an evil human. They just may not have any awareness that these are the boundaries you need. I own up to this in my book. I always really cared about my teams when I was a leader, but I had no awareness of any of these things, and so I didn't honor their boundaries. And so that's the first thing I would suggest is have that conversation. It's actually a practice I lead a lot of teams on, to have a conversation about boundaries. And it turns out it's usually not huge things. It's usually simple things like, listen, if you send me an email Friday afternoon with a to-do, can you tell me when you really need it? Or I would love to not have calls before 9 a.m. Is that possible? And it's really empowering to have those conversations with your boss and your team, if you're a leader, to lead those.
Hey, Natalie, before Katie and I got started with this interview, as we were preparing for it, we were talking to each other about the different ways that we kind of deal with separating work and life. And we both are big proponents of physical exercise. Like Katie runs every day. Oftentimes, actually, I'll be talking to her at night, and she's running through Central Park. I
super fast, by the way.
Super fast, of course. Of course. And then I try to get on the stationary bike and do a lot of cycling and get out there. And I'm wondering how physical activity fits into this, because at least for both of us, and it's like such an essential part of balance.
It's really important. We have mental energy, physical energy, emotional energy, and so it's really important, and you both know, but doing something physical, it releases endorphins. It gives you a sense of progress. Actually, like doing a little workout, there's interesting research about weightlifting. And lifting weights turns out to have this interesting mental benefits of, it gives you confidence that you can achieve hard things, because your brain is like, oh, look, I lifted weights, my muscles grew. Oh, I can do this also in my regular life. So physical activity is really important. And the thing I would encourage everyone listening is to recognize that it doesn't mean you need to go run every day. I take a 5-mile walk every morning. That's my zen. Nice. If you wanted to torture me, you'd make me run. That would be a fantastic way to torture me. In fact, I used to live in New York City, and I think I went running in Central Park twice.
Yeah.
And I was like, okay, that's not
Natalie,
me.
We are seeing President Biden make his way to speak to the American people, so we are going to have to leave it there. Let's go to the White House and hear President Biden.
As I've been making for some months now, 2 vital calls that on the situation in Russia and Ukraine. The first was to a bipartisan group of members of Congress who are currently representing the United States, along with Vice President Harris at the Munich Security Conference. The second was the latest in a series of calls over the past many months with the heads of state of our NATO allies and the European Union, to bring them up to date on what the United States thinks is the current state of affairs and what's likely to happen in Ukraine in the coming days, to ensure that we continue to remain in lockstep, that is, the European Union and NATO. Despite Russia's efforts to divide us at home and abroad, I can affirm that has not happened. The overwhelming message of on both calls was one of unity, determination, and resolve. I shared with all of those on the calls what we know about a rapidly escalating crisis in Ukraine. Over the last few days, we've seen reports of a major uptick in violations of the ceasefire by Russian-backed fighters attempting to provoke Ukraine in the Donbass. For example, a shelling of a Ukrainian kindergarten yesterday, which Russia has falsely asserted was carried out by Ukraine. We also continue to see more and more disinformation being pushed out to the Russian public, including Russian-backed separatists, claiming that Ukraine is planning to launch a massive offensive attack in the Donbass. Well, look, there is simply no evidence of these assertions, and it defies basic logic to believe the Ukrainians would choose this moment with well over 150,000 troops arrayed on its borders to escalate a year-long conflict. Russia's state media also continues to make phony allegations of a genocide taking place in the Donbass and push fabricated claims warning about Ukraine's attack on Russia without any evidence. That's just what I'm sure Ukraine's thinking of doing, attacking Russia. All of these are consistent with the playbook the Russians have used before to set up a false justification to act against Ukraine. This is also in line with the pretext scenarios that the United States and our allies and partners have been warning about for weeks. Throughout these tense moments, the Ukrainian forces have shown great judgment and, I might add, restraint. They refused to allow the Russians to bait them into war. But the fact remains, Russian troops currently have Ukraine surrounded from Belarus along the Russian border and with Ukraine to the Black Sea in the south and all of its border. You know, look, we have reason to believe the Russian forces are planning to and intend to attack Ukraine in the coming week, in the coming days. We believe that they will target Ukraine's capital, Kyiv, a city of 2.8 million innocent people. We're calling out Russia's plans loudly and repeatedly, not because we want a conflict, but because we're doing everything in our power to remove any reason that Russia may give to justify invading Ukraine and prevent them from moving. Make no mistake, if Russia pursues its plans, it will be responsible for a catastrophic and needless war of choice. The United States and our allies are prepared to defend every